Hi, it's Dwyer, gamblersadvisory.com, a free site, money1776.com, a free site. Today is May 11th, 2023. Let's talk money. But first, remember, nothing I say in this video should be construed as financial advice. I want everyone watching this video to do their own due diligence, their own homework. All I'm doing is talking about things I already own or things I'm strongly considering of owning, right? In other words, I'm just telling you what I'm in pursuit of, right? Sharing some ideas with you. I hope everyone watching this video feels free in the comment section of this video to share ideas with the public. Remember, the opinion you should follow should be your own. Just consider this to be a second opinion from a complete stranger online. Now, let me just first talk about my bias. I believe in free markets, right? I don't buy this whole vilify China narrative, right? I believe that's some political game that politicians are using to try to get elected. It doesn't make sense economically. Understand, when you know that China, a huge country, right, until recently the most populated country in the world, when you know that China is interested in international trade and has reached out to other countries, right, Brazil, Russia, India, now the most populated country in the world, right, South Africa, when you know a country's interested in trade and has far more people than you. China has something like 3 times the number of people the United States has. You have to ask yourself a question. Do you want to be in business? Right? If you want to be competitive on a worldwide level, you're going to have to trade with the world. There are a lot of profits to be made providing goods and services to China. Understand, China is involved in some cutting-edge technology, quantum computing, for example, electric vehicles, for example. You really need to ask yourself whether you're silly enough to bypass the opportunity to participate in win-win trading with a willing trading partner. Now, here in the United States, sadly, for the last few years, we've been stupid enough to try to put up trade barriers, right? I believe we would all be better off trading with countries. Let me point out, too, that even a country like North Korea, if they didn't want to trade with us on a level playing field, but were willing to have us in their markets and to buy our goods and services, I'm good with that, right? I would only be trading with a partner if I'm making a profit. If I'm making a profit off the transaction, if my trading partner has some kooky communist setup that artificially depresses the standard of living for their citizens, well, that's a pity to me. I'm getting my end of the bargain by being able to make a profit off the trade. So I don't understand the mindset here of, oh, we're not going to trade with this country because they're competitive with us. Folks, in a capitalist system, it's all competitive. So, with that macro set, one of the big stories to me is the fact that this belief that China's economy post-COVID was booming seems to be inaccurate. If you look at some of the canaries in the gold mine, if you look at the copper market right now, which usually, when there's a lot of economic growth, flies off the page, you'll notice that copper this morning is sluggish. Right? Look at the COPX. Look at some other copper bellwethers. Look at the last 12 months of Freeport-McMoRan's performance. So that tells me that China's economic comeback is not as big as we had hoped. Folks, that spells really bad news for the world economy. Because understand, we have inverted yield curves, right? The 2-year spitting off an interest rate that's greater than the 10-year right now. In other words, we have people, investors, who are bearish on the future, and that's controlling the market price, the interest rate, right? I'm not that concerned about what the Fed's doing, quite frankly, because understand, what determines the interest rate is much bigger than that, right? We've had errant Feds in the past, but just understand what really controls the interest rate are people's expectations, their confidence or lack of confidence in the economy. So just understand, we have inverted yield curves. Normally, debt that matures years out in the future has a higher interest rate than debt that matures short term. The idea is, if you're going to tie up your money long term, you want to be compensated for it. Well, right now we have the opposite. People are paying more to borrow money short term than they are long term right now. The brunt of the recession won't hit, history tells us, and know your history, until that yield curve actually changes, reverts back to the mean. So we're looking at bad days ahead, and we don't have an economic boom in China right now to save us. There isn't the international trading partner who could step out and who could say, hey, your automobile industry is sluggish, I'll buy those autos off of you. Right, folks? The money is just not out there. Now let's talk about what that means for housing. Right? Let me point out too, it's completely free. I have a housing site, housing777.blogspot.com. Right? Let me point out, years ago in another life, I used to represent realtors. Right? I've even done a trial at a Silvar out here in the Bay Area. Well, let's just be clear here on housing. Housing is dependent on lending conditions, which right now are terrible, as well as the money supply, which can be manipulated and is manipulated by government to address urgent needs. The million-dollar question here, and why I have a hedge on housing, and we'll discuss it, is whether the government is going to realize that things are so dire that they need to raise the debt ceiling, right? McCarthy's talking with Biden. The debt ceiling will be raised. It's a matter of how much, right? There'll be a dog and pony show about spending cuts and stuff like that. How reliable has the government been in delivering on spending cuts? Right? And so understand, housing really depends on the lending market. It depends on the jobs market. Folks, the jobs market is deteriorating. Right? Google the jobs market, see trends. You're going to see several employers, including some well-known ones, who have laid off thousands of workers. Understand, too, our definition of a job has changed. Right? They're calling jobs the kind of gig things, delivering food from a restaurant, that high school and college students do to get beer money. So I would argue that you can't trust the job numbers. Just look at the number of people who supposedly have 2 jobs. This is a far cry from an era where we considered a job to be something you did 40 hours a week for 50 weeks a year. Right? And so understand, I personally believe what I'm operating off of is my belief that government is going to further debase the currency. And when I say government, I'm not just limiting my comments to the United States. This is going to be a global phenomenon. This has been a global phenomenon. Look at the plunging value of the dollar, right? So governments, especially when it gets colder in winter, and people say, hey, politician, I voted for you. If you want my vote in the next election, you're going to have to find a way to help me heat my house. I have young children. I have a wife. I have a grandmother who lives with us. Right? We can't afford these utility bills. We can't afford these energy bills. I believe politicians who want to keep their job are going to find a way to inflate away the money, the monetary base. Right? Now, if that happens, real estate will bounce back. Right? If you make the money cheaper, if you have government programs where they're saying, oh, we need to make sure that people with bad credit scores have access to capital, can participate in buying homes. By the way, that's what's being discussed here in the United States right now. Right? When you have a regime like that, folks, that's pro-housing. Right? That's pro, in fact, let me change that. That's pro the current status quo in housing. If you believe that balloons are healthy. So in housing right now, because it's unclear to me whether we're going to debase the monetary base, I'm in open. That's the symbol. It's open door, but the symbol is OPEN. Right? They have a natural monopoly. View them as an internet portal to buying and selling and financing houses. Right? I talked about open here in several videos. They've been doing quite well. Right? The stock is now above $2 a share. They've been doing quite well the last 6 weeks. Please do your due diligence. Look at open over the last 6 weeks. Understand too, if you believe that institutional players who own a lot of real estate plan to do transactions to take advantage of current market conditions, then you have to believe that they might use an open, which is position again as an internet portal to facilitate real estate sales. They might use open because of the economies of scale. Right? The ability to use one platform to flip thousands of homes. Right? But let me say this. I'm also in SRS. Right? Now that's an inverse ETF that thrives when housing is down. The logic is simply that the price of homes, when measured against the median income in particular areas, is grossly inflated. Right? If your parents bought the family home in the early 70s, chances are they paid between 3 and 6 times median income to purchase that property. Understand our relationship with real estate has changed since the early 70s. So now they're paying much higher than that, right? Between 7 and, here in the Bay Area, 14, 15 times the median income, right? I believe eventually that's going to revert to the mean. So I want to be in SRS. Also, if housing crashes, if in fact governments pursue a sound money strategy where they're not inflating the money supply, where the dollar remains relatively constant versus, let's say, the price of an ounce of gold, and SRS is going to be a great hedge on the market. Right? So it's a barbell strategy here for me on housing. I have open door, right? The symbol is OPEN, an internet portal that explodes when housing does well. I also have SRS as a hedge, an inverse ETF, which will rise if housing does poorly. Let's go further. We were lucky we had a mild winter last winter. I don't believe we're prepared for this one. Yes, I'm making this video in mid-May. So as a result, I'm bullish on energy in general. I'm bullish on Chevron. I'm bullish on Exxon, right? Understand too, I'm bullish on natural gas. Now, I believe this is a great time to make money, right? When you're able to see that natural gas has been doing poorly, when people have lost interest in liquefied natural gas, and you privately know, or at least you think you know, that as energy needs spike, given the environmental benefits of using LNG, right, liquefied natural gas, you feel that it's going to bounce back. The bounce is going to be market driven, right, demand driven. Then this is an opportunity. So I've bought a call option in EQT. That's the symbol. They're one of the dominant liquefied natural gas outfits in the United States. And of course, I got a great price because just understand, liquefied natural gas has been down. I don't believe it's going to stay down. I believe energy is going to be one of the big stories a few months from now. So right now, when it's out of favor, when it's out of season, this is the time to step in and to make purchases. Let's talk about some other ideas. Now, I'm a bit stunned that Amazon released earnings and there was some softness in the Amazon Web Services cloud computing division, and everyone panicked. Right? Forget the fact that they were delivered on it in their earnings announcement. Right? Amazon got punished by the market. Now, contrast that with Apple, where Apple's revenue was down. Apple's income was down. Right? But yet, Apple did well on things like selling iPhones. And that was enough for their earnings report to be viewed as bullish. Now, in time, the market will sort this out, and I believe Amazon is going to do well when you think about their pieces of the puzzle. Right, folks? Cloud computing is still growing by leaps and bounds. Understand, cloud computing now is a natural fit for the crypto industry. Let's go one step further to artificial intelligence. And I'm going to call the company that starts with A, the A company, simply because I have some devices here in the background that would get triggered if I mention the name of the river. Right? I need for people to just understand that the A company owns a significant chunk, I believe it's 20%, of Rivian, the EV company. Also, artificial intelligence has been with us for some time. I like to wear sweats when I can. I'm kind of an Al Davis figure, right? If you see me wearing a shirt and a tie, I'm either in court or I'm at someone's wedding or someone's funeral, right? If possible, I prefer wearing sweats. Well, for years, when I go on Amazon, it's as if Richard Dwyer built the site, because I get bombarded with sweatpants and sweatshirts and, tracksuit type clothing because of the A company's artificial intelligence. It's been with us a long time. Now, we're all hot unbothered over ChatGPT, which is a game changer, right? It certainly has helped what I do in business. But folks need to understand, if you are interested in artificial intelligence, the A company has been at it a long time, has built their online retail business on AI going back decades, right? They are AI adept. Let me also point out, too, that in a recession, when you're out buying goods and services, right? Your kids need clothes and all this other stuff. You want a big selection at the lowest prices possible. You understand right now that the A company is on the cutting edge of delivering on that value proposition. You're not going to suddenly start shopping someplace else. You're going to shop with the retailers you know, right? As we head into a recession where every dollar is going to count, right? The A company, again, is perfectly positioned. And of course, while I'm there, while I will buy an A Prime membership to have access to the retail business, I'm going to notice the Prime Video division, which, by the way, people don't realize, has more customers than Netflix in several big countries, right? India, Japan. So you mean to tell me that I can buy the A company, get EV exposure, get online retailer exposure, get streaming exposure, get AI exposure? I'm interested. I know people are saying, hey, these are slower times, tech's going to get punished. I think just the opposite is going to happen. Has anyone figured out that the A company will be the only place over the next 10 years that sports fans will be able to access Thursday night football, right? NFL Thursday night football. Well, that's going to lead to a lot of sports bars now, right? Getting that service. It's only a matter of time before you're going to be in a sports bar or some entertainment venue, and someone's going to say, hey, why don't you put on that A Prime show? And the bar is already going to be set up to show A Prime shows in the venue. Let's talk about another company, and I know a lot of layoffs, but just understand, here again, we're looking at the cloud. The third most dominant player in the cloud computing sector is Google, right? Understand, when it comes to autonomous vehicles, Waymo, look at that division. If you believe in the explosion of robo-taxis, isn't that the thesis that Cathie Wood has right now for Tesla? Well, just understand, Google has a good grip on the technology. Google's in the space. Of course, Google's also in the AI space, right? Google Bar today, they already have announced they're going to have advanced artificial intelligence offerings embedded in the Chrome browser. They're going to leverage the popularity of the Chrome browser with AI going forward, right, folks? Google is extremely well positioned in several areas, right? Speaking of the NFL, you know who has the NFL package this year? What used to be known as a DirecTV package? It's Google through YouTube TV, right? Understand too, YouTube TV is groundbreaking for the streaming genre, right? So I believe Google is well positioned for the future. Understand, you're getting Google and Amazon at prices that they haven't been for quite some time. right? Here again, people view bear markets as, a tough time. It is a tough time, but it's also a great investment opportunity if you've kept your eye on quality companies. Those companies are expanding into vibrant parts of the economy, right? The artificial intelligence market, for example, right? And you realize that there are going to be, at least short term, some cost savings from all the layoffs. Google's well positioned. Look at what Google has done, by the way, the last 2 weeks. Now, everyone here knows I've been in the crypto for years. Let me just say, um, crypto mining right now, to me, is a great play. I believe crypto is going to stay with us and be vibrant. I'm not thrown in the slightest by the recent volatility. Understand, if you've been in the crypto space for a while, you expect volatility. You expect bankruptcies from some of the major players, right? You understand that this is part and parcel of the market. So let me say, what I like with crypto miners, where you're already getting exponential growth, right? If Bitcoin goes up, a Bitcoin miner is going to go up even more. Well, if you're a speculator like I am, you appreciate these miners that are actually in the options market, right? You mean to tell me that if Bitcoin goes up, I'm going to get exponential growth owning a Bitcoin miner? And you mean to tell me that I can get even more growth, right, if I do so by buying a call option? Well, folks, they're offering calls on Hive, Hive. Take a look at that miner. Riot Blockchain, RIOT. Take a look at that miner. Understand, too, the Grayscale Trust. I like the Bitcoin Grayscale Trust. That's GBTC. I like the Ethereum Trust that Grayscale has. That's ETHE. Of course, I also like holding some Bitcoin and some Ethereum, right? Why not do it all if you believe that the market is vibrant? I also like companies that have extensive Bitcoin holdings. MicroStrategy, for example, right? I believe in a few years, the crypto holding part of MicroStrategy is going to take over that company completely, right? So those are some of my ideas right now in this market with regard to EVs too. I like what Ford is doing. Right there again, understand, you can buy the stock, it's cheap right now. You can also go out and buy a call option on it that, doesn't mature for a couple of years, right? If you want to hedge your risk even more. Let me point out too, referring to Amazon, I understand for the technical trading crowd, right? We'll call it the relative strength index crowd. I understand that Amazon is above its 50% RSI.
I missed something. Can you say it again?
Obviously, I'm a customer, as you can tell from the background. Let me just say, that's fine, folks, because understand, the A company is coming out of a period of very slow growth, at least in the stock price, right? And so the RSI readings are going to be a little bit off. I'm not too concerned about the above 50% RSI reading on the A company right now. Let's just say I'm bullish on it. Anyway, that's how I see it. Let me hear from you on any aspect of what I've discussed, right? If you're someone who believes we should build walls around the country, we should try to strike one-sided trade deals with major economies like the Chinese economy, right? Has anyone figured out that the BRICS lately are doing better than Western Europe? Well, anyway, if you're someone of that bent and you want to leave your comments, please feel free. Right? If there are other investments I haven't mentioned here that have caught your eye in any space, please feel free to disclose that and discuss that with the public. Understand, I view the main part of these videos to actually be the discussion section, the comment section, where people get an opportunity to share their thoughts with the world. I hope you do so. Thanks for stopping by.